Good morning, everybody. Today is Monday, February 23rd. I'm wrapping up the training videos for the Counterpunch, and I thought I would run the recorder and we would just watch this live trade of the Russell E Mini unfold, and I would talk you through it. And while we're at it, let's look at a bunch of other markets that traded today with everything that I've been teaching you so far. I thought it would be nice just to look at a very current session, not knowing what's going to happen. This is just today's trades on a bunch of our favorite markets, and we'll just go through them. We'll talk through the situations, and I think it'll be a good learning experience, good practice. The Russell had a short right here. That was right at 9:30. You could see the yellow line coming down, the 50 EMA presenting a squeeze zone, so we're not looking to go long here. I do have our new directional indicator on the chart. This is taking the place of the 20 SMA that we talk about, and I do not use this with the Russell. I only put it on here because I want to watch it and see how it looks. So you could easily take it off. We don't need it today. Notice that there's another possible long trade right here. But remember, we're in the squeeze zone. We got the mustard line or the 50 EMA coming down, and we would, even though that's a little bit above the 50 EMA, we look to our left and there's a tiny little spike on this bar that we would want to adjust around, and the price never got up to it. Remember, we want to stay short in this zone here while the 50 is pushing down on the 200. Okay, so we do stay short, and then it breaks through. Now, this little green dot here, remember, that's coming out of chop, and that could act as like a power booster in the direction of our trade. So let's see if it does that. We can see that it already has come down, and it's getting close to that first target right here. So momentum is definitely on our side. You even have another setup to go short there, which we're not really paying attention to, and another setup to go short here. Again, we're not paying attention to it. We're in this trade here because this was the first trade of the day. So we'll just see what happens as this trade unfolds live. Okay, there it is, starting to move, hitting target 1. Remember, we would move our stop now from here down to here to lock in 1 tick. Trying to get to target 2 now. And there it is, pushing through to target 2. And you can see that the tracker is actually trading a different, it's tracking this trade because it thinks it got long right here. Of course, we didn't because of our rules. So we could still borrow that trailer because it's now trailing the jump line correctly. Here it is coming down and hitting target 3. And you can see the trailer starting to move lower with each bar that closes below the jump line. And what a great way to start the week. One and done, all 3 targets being hit. And now it's just a matter of managing the trailing position. And that's this morning's Russell E-mini trade with the 377 tick chart. And it's even pushing lower. So maybe the trailer will pick up an even bigger move. It's moved even lower still, and still pushing lower. Notice that all these trades hitting all their targets. And the trade finally finishes right here. And you'll notice the trailer did make a little bit more. I think 1 tick more than the actual third target. All right, let's look at today's Dow E-mini. With this one, I use 3 targets. I go to target 1, target 2, target 3. And we do use the SMA, so we're going to use it today with the new directional indicator. We're looking to get short, I believe, 8:30. Well, let's see. Let's get to our start time. Yeah, 8:30. So you can see the directional indicators down. We can go short, also going in the direction of the 50 EMA, and the short is at 18,062. Because it's bright green, we know that's a trade that will be tracked by the calculator. Okay, and that one comes down and hits target 1, target 2, target 3. Notice it's trading in the direction of the 50. It's inside of a squeeze zone because we're in a chop. We are in a chop zone also, but we're trading with the direction of the 50, which is what we want. And the trailer actually comes down to here if one were trailing. So a very successful trade. Look at the third target, 18,036. and the price coming down to 18,036. Remember, these are just today's trades, but you can see how well this strategy works on any given session. Here's a look at the Euro USD. This is a 233 tick chart. You can see that the directional is down. It's red, so we're not going to get long here. But then it turns blue, and on the next bar, you're able to get long here. And that goes long from 1309. Okay, so we'll call it 1311 after spread. But notice that the first target is only 6 pips. So, and I need to turn on the rounding part of this tool. So let me just do that really quick. Let's open up the calculator, double check our key level adjustments, which is set to false. So I'm going to set them to true. And let's go ahead and we'll turn off the key levels because we're not going to use those, but we are going to use the rounding feature. So this setting all these to 0 turns it off, but then setting this to true turns on our rounding. Rounds that extra pip. Okay, so now everything moved up, and now we can see. So only 6 pips to the first target, so you're going to ignore that. When you're trading Forex, you take a fourth off at target 1, fourth off at target 2, a fourth off at target 3, and you trail. That's the best way to do it. If target 1 is too small, then take 2/4 off at the next target that's big enough, or 3/4 if you have to go to the third target, right? So 2/4 here, come off, and you can see it comes up, hits that middle target, so you're going to take half your position off. Hits the third target, you take 1/4 of your position off, and then trail the jump line up to here. So all in all, 1/4 of your position made 11 pips, 11 pips times 2, right? So half your position made 11 pips. 1/4 of your position made 15 pips, and then let's see, we got in at 09. You have to take out spread, of course, so maybe subtract a few pips out of there. So 09 minus 1320. Yeah, so that was 11 pips after spread, another 9 pips. But a nice successful trade. Look how perfect the targeting was. So Euro USD with a 233 tick worked like a charm. While we're at it, let's look back at today's European session with the Euro US 233. Okay, you can see a short right here. And again, you have to wait because it's blue coming up, but then it turns red, and you can take that trade 1363. And the first target's making 12 pips, so that's fine. We can go to the targets that are printed here, and it comes down and hits target 1. Take 1/4 off, and then the trailer moves in, locks in a little bit, and then it holds. Trailer holds barely. You can see it pushes down and hits target 2, and that was good. 20 pips, and target 3, and look how perfectly that one hit. And that was good for 27 pips, and now trailing down, and then finally stopping out right here, right in between target 2 and target 3. So really nice trade today with the Euro US on the 233 tick chart. And a quick look at a 5-minute chart using MT4. Right here, there's a setup at 825. See over here, 825. And then it turns blue. You're able to get in on that. Okay, the directional turns a tiny bit faster than the 20 SMA. So I found it works a little better because you're able to catch trades that you would have just barely missed with the 20 SMA. So this is definitely an improvement. And obviously you can see how it won. It hit target 1, target 2, and hit target 3 perfectly right there. So the 5-minute chart today with the Euro US working great. Taking a look at today's European session. Let's see, this is at 2 o'clock right here, this bar. And then you have a short setup. And you can see how it triggers in. Comes down and hits the first target. And if you look at the data window, you can see it's got some nice rewards here, a 16, a 22, 29 pips to the targets. The entire trade is laid out before you. You're risking 16 pips, so even to target 1. It's almost a 1-to-1 ratio, but remember when you hit target 1, you're ending up paying spread, so you're getting out a little bit above it because you pay spread on the buy side. The stop is here because remember we move the stop and we pay attention to the stop with each bar that closes below the jump line. So once this bar closes, even though the calculator pushed the stop down here, we're still paying attention to the stop here. That's important to remember. And so then it closes below the jump line and the stop moves down to here, and then that's where you would stop out. So trade number 1 only hits the first target. If you want a second trade, you have one right here. And remember with Forex, we've got the closing above the jump line for trade cancellation set to 3, not 2. And so even though both these look like they close above the jump line, it comes down, triggers in, and you have another trade that hits target 1 and target 2 and target 3 and literally trails down to here. So after you hit target 3, you end up stopping out right here. So 2 great trades on the 5-minute chart during the European session. Looking at the 15-minute chart, you can see that this one triggers in, but it's 7. It's too close. We start this at 8:30, and so it then comes down and then comes up. Can you get in sync with this trade? That's right at 8:30, so you can. So this trade does trigger in. The only problem is the directional's red, so really you can't get it. And then a brand new setup takes place. Okay, so then we're gonna go in on the brand new setup if we can, and you can see that it does turn blue here. So you're able to pick up that trade right in there. You could do it intra-bar with this indicator. And so now it's going up, and we'll see if it can make it to its target or not. The only thing I would point out is it is a little bit in the chop zone, and so trading up into the 50 EMA might be a little risky. So that's one of those deals where, if you take a trade like that, you can use the yellow line as money management because it's gone pretty far here. Let's see, it's gone from the entry of 1322 and the moving average is at 1336. So you have enough space in here. It's more than 10 pips. So you can take this trade, and then once it gets to that money management, maybe you start trailing the jump line to take risk off the trade. Although you did come out of the chop zone now. You did have a failed swing down here. It was failed to make a new low, and so there's a good chance this is going to head higher. During the European session, let's see, what did we get? That's at 145. A little bit, actually 145. This bar opens at 2 a.m. because Owanda is a little different from TradeStation. The timestamp is when the bar opens, and so you're able to actually take the short. You're going to ignore target 1. It's only 6 pips. So you're going to take your first and second position off at target 2, third position off at target 3, and then you're going to trail all the way down. So you can see the 15-minute chart also doing great during the European session. Here's a quick look at crude oil futures. We like a 377 tick chart. We start right at 850. There's a setup to go short, a counterpunch trade. Everything seems fine. It's at 846. Triggers in down here, but it's before 850, so we can get in sync with this trade. We don't need to use the directional indicator on crude oil. You have the choice. You can use it, but you don't have to. So you either use it and then you use it all the time, or you don't use it. So I'm going to show you what happens. You can see that it turns red, and basically when that bar closes, the directional turns red, and the entry is at 48.98. Okay, so if you're waiting for the directional indicator, you miss the trade because this one opens up a 1 tick below. You see? Unless you're giving it like a little tolerance. All right. Otherwise, you're just taking it. If you're not using the directional, you're just taking that trade, and it comes down. It misses target 1. So now if you're taking it with the directional, you have a chance to enter it right here because it comes back up. It hasn't hit money management. It hasn't gone 90%. It's gone about 85%. That first target is 14 ticks, and it missed it by 2, so not quite 90%. So you can get in sync, and so using the directional ends up getting the same trade but a few bars later. So what happens? Pushes lower, and it hits target 1, it hits target 2, and then it stops out with the trailer right here for a really nice trade, no matter whether you're using it with the trend, the directional indicator, or not. It ends up being the same trade, and you're one and done with crude oil. And so you made 14 cents, which is $140, 14 cents, and 22 cents, which is $220, and then the trailer ended up making 10 cents. So nice trade, nice way to start the session today with crude oil. And what if you wanted to trade a faster chart with smaller setups on crude oil? Like, for example, go with the 233 tick chart. What would happen? How did it go today? Let's take a look. Let's just go back, and keeping all things equal, we'll go back to the start time and see what we can do. So we're looking for 850. Here we are at 845. That went too far. All right, here we go. I didn't take the arrows off the other chart. So that was from the 377 tick chart. So this trade is at 853, and you can see that the directional, when this bar closes, it did turn red. Okay, that's all we care about with this indicator. 48.94, and it comes up, down. Does it work? There's the other arrow from before. And look at that. You see it comes down and hits target 1, target 2, target 3, hits it perfectly, and then bounces up and stops out. These targets are dynamically tuned to the market condition, to the actual chart you're trading, and that's why we're getting such amazing accuracy. Even the trade before, which we have nothing to do with, hit target 2 right on the nail, see? You're going to see that a lot with Counterpunch. Let's take a look at the ES this morning. All I have to do is copy and paste this chart here and change the symbol. So we'll just change it from crude oil to the ES, ESH15. We'll look at a 5-minute chart starting at 8:30, which is 9:30, right? 8:30 Central. This is a 5-minute chart, so it looks really bizarre here in the pre-market. Just don't even pay attention to it. So here we are at 8:30. We will use the directional indicator on this, and you can see there's a short right here, and it's in the chop zone, but the 50 EMA is above it. You take that, triggers in here. Are we going to take this and stop and reverse? No, we're not. First of all, it's just an entry. You don't even have trades because you are below the chop indicator. But also, we want to stay short, and we would add a couple ticks onto this anyway just to protect ourselves. Plus the directional indicator is red, so we would stay short. And it really hasn't done much. This is the ES. It's just kind of chopping around, so maybe it'll come down. We'll have to wait and see. We could look at this on a tick chart. It's probably my favorite chart to trade. The ES is the 1974 tick chart, and you can see it looks a lot different, right? There's a lot more bars. The 5-minute chart I found works really well with the ES in general. It tested well. So again, 8:30. Here we are at 8:30. Directional's down. This is the first trade right here. Triggers in. Got your targets. Your first target's 2 points. And then it bounces around. You're kind of in the squeeze zone, aren't you? You're inside the 50 and the 200. The 50 is pushing lower. You're in chop. You want to be trading down with the 50. And it comes down and it hits the first target for 2 points. So then the stop moves down. You can see it moving down right here, locks in a tick, and then it comes up and stops out. So a successful trade, kind of small. Remember, the ES is a difficult market to trade, but 2 points is 2 points. And of course, power of quitting makes a lot of sense here. Market just doesn't do much ever since. It just kind of goes up and down and goes flat. But notice that there aren't any other trades to take, right? It stops out here, and none of the other trades even triggered in. Here's a chart that I find very interesting. I found that it works amazingly well. It's a 500 share bar chart or volume bar chart, using it with the Dow E-mini. Again, starting right at 8:30 like we normally would. Here we are at 8:30. There's a short here at 8:32. Trigger short. These bars are based on volume. They're interesting bars. Counterpunch works really well with them. And you can see how it comes down, hits target 1, target 2, almost, just barely misses. And then the stop is here still, right? Last bar to close below. It comes up, doesn't hit the stop. The stop moves down as each bar closes, and it finally does stop out right there. So it wasn't quite able to hit target 2. It missed by just 1 tick, but still a pretty nice trade. And of course, we're out of the market at that point with power of quitting. Usually you want to get 2 trades that hit target 1, but because if it barely misses target 2, that counts. You give it a little bit of room, a little tolerance, margin of error, room. So that would count as power of quitting, just barely missing target 2. See how the DAX did starting at 9 a.m. Eurex time. Here we are at 8:48. This is using the 233 tick chart. You get a setup right at 9, and it does trigger in using the directional. And it can't quite get high enough. And then you can see you get a short here, and the directional turn down. You want to make a 2-tick adjustment. So instead of 11,144, you get in at 11,143 just to protect the long trade. And you can see it's just a tiny little loss, right? Because the entry was there, and then you would get short right around there. And it pushes down and actually hits target 1 and almost gets a target 2, not quite. Target 2 is at 11.25. It gets as low as 2.8, so it misses by 3 ticks. So the stop is moving down and locking in 1 tick, and it would stop out with 1 tick with the remainder. So you still need another trade, and then you get a short right here. The directional is red. You can take it, and that one almost gets to target 1. A little choppy this morning, almost gets to target 1 again, and then you get a possible long trade. But the directional's down, so we're going to stay short. Still staying short. You can see that it does come up here, and it hits target 1. And when at that point the bar closes, the directional turns blue. You can't get in sync with this trade because it's gone too far. So your stop on your short is up here. Let's just mark it. Right? So you're still short. You could end up getting a full stop out. Okay, but then look what happens. It comes down, and then it pushes down lower and hits target 1, target 2, and target 3 perfectly. Target 3 is 11.097, and this pushes down to 11.097.5, so it misses target 3 by just 1 tick. So however many positions you'd be trading, of course, you've got power of quitting no matter how you look at it. And the directional indicator saved us from going long, even though that would have been a winner, right? If you weren't using the directional and you end up going long here, you still only have a tiny loss, because here's your entry, and then you go long only a few ticks above it, and then it would have come up and hit target 1 and target 2, and that also would have been power of quitting. You see, so remember, you could trade it with the directional or without, but it will produce different trades. Usually the net result will still be good regardless. So it's an interesting example. Fairly choppy market too. If you know how to handle it and you know what to do, just logically going through the sequence, one bar at a time, one click at a time, one setup at a time, think it through, you'll see how well this works. Let's take a look at the euro yen. This is a 233 tick starting at 8:30, just keeping all things equal. There's a setup here that's at 8:40. Looks like it's gone too far. It does come down well, we're not going to take it anyway because the directional is down, right? We want to use directionals with Forex. So we avoid that. It turns blue. There's a long trade right here. That's at 9:04. Target 1's too small, so we'll go to target 2 and target 3. And it comes up and hits target 2. Exit 2/4 of your position. And then we have to move our stop up manually because the calculator's tracking the white trade, you see. So it's going to stop out with break even. So half your position is able to grab 14 pips minus spread. If you wanted one more trade, you get this one here. And again, this is pretty small, so you got to go to the third target with 3/4 of your position. And it hits it no problem. And then trails, and that one's still going. If we want to look at this on a 5-minute chart, just to see how that would have done. All right, so you could easily see this is at 8:40. The directional's down though. Turns blue here. And so can you get in sync? Yeah, now here's a case where you've got this earlier trade and then a newer trade. If I was just triggering in at this point, I'd probably stick with the earlier trade. But since we're getting in sync, you want to get in sync with the newer trade. At least that's how I do it. And it turns blue, so now you're able to get long here. And the stop's down here, of course. It comes up, and you can see how it hits target 1, target 2, target 3. Of course, the white trade would have been good too. So, you know, you can get in sync with either one, I guess, since they're right next to each other. One's a counterpunch trade, one's a failed swing trade. Either way, you can see even this trade just hit its target as well. Look how accurately too. So that's the Euro Yen during the US session. During the European session starting at 2 a.m. you could see that there's a squeeze zone with the 50 pushing down to the 200. And so inside of that you're not going to go long against the 50 even though the directional's up. It's one of the filters when it's pushing down to the 200. You want to stay short, not long. Okay, it's very important you remember that. It'll save you a lot of losing trades. That was a losing trade. You have a short right here. Okay, you've got the directional working for you, and you're moving away from the 50 out of the squeeze zone. And it does trigger in, but then it comes up and stops out. So sometimes it's just not going to work. Okay, then you have a long trade, and that one also stops out. So the European session, we mostly seen winners today, but here's a case where there's a couple losses. And now you're able to get short here, and it's still the European session up until 5 a.m., 2 a.m. to 5 a.m. So you're able to get short right here with the directional. And, you know, you're picking up some big targets. Target 1, target 2, almost target 3, and then it stops out up here. So that's a pretty big trade, and you'd have to do the math to see that that might have offset the 2 losing trades. Would have got you pretty close to being positive, probably either a little positive or a little negative. But that's it. That's the 3 trades in the Euro Yen during the 5-minute chart. The 233 chart might have won. You know, you could put that up and take a look. This video's gone on for quite some time. You've seen a ton of examples with today's session, walking through and talking through a lot of different situations. So we'll end it here. Hope you enjoyed it. See you on the next one.